want to thank everyone today for joining us for this quick Q&A with Donna Lea from Financially Yours Advisory Services. So really honored to have her here. We know that it's a really challenging time for a lot of people, and us as professionals, we always want to be a resource to our clients. For me, it would be real estate, and for Donna, it would be in the financial services. So today, we're just going to have a quick chat, informal chat. As people join us, you'll probably hear the chime. So let me change that actually, so that it doesn't do that. Okay. But the conversation we're going to have here today is going to be recorded, and we'll share that with everyone later. But as we get started, I just wanted to introduce myself. I'm Nancy, and I'm part of a team, Feng and Nancy. We're with Berkshire Hathaway HomeServices in California. We primarily help families and individuals and investors with residential real estate. We have a service mindset, so we always put our clients first, and we strive to create custom solutions for them, whether it's investment or their first home. So we're here in Southern California, and I want to introduce right now our guest speaker, Donna, and she is with Financially Yours Financial Advisory Services. They're independent holistic planning firm. Independent meaning they don't have any products to sell, and holistic, they have a big picture approach and a long-term planning solution. So thank you, Donna, for joining us today. I want to get started. Yeah, thank you. So I'm sure a lot of us have been hearing about, a lot of the programs that have been available out there for individuals and business owners. And, we probably should have done this probably a week or two ago, because things are constantly changing. And even from the moment that we started talking about having this interview, things have changed. And that was just a week ago, So I was thinking that we would start first with, maybe how, families and individuals can save money, and then we would transition over to small business owners. And let me just make sure all the participants are muted. So, okay. And then I'm going to just unmute you, Donna. Okay, there we go.
Can you hear me?
Yes.
Can you hear me? Okay. Okay, well, thank you very much, Nancy, for having me today. I really appreciate everyone's time to be on the call. I know everyone must be working from home, and they've got work to do, as well as tending to their children, whether you're homeschooling them or just making sure they're not doing anything dangerous. So I know it's very challenging in these times. It definitely is an unprecedented time in many, many ways, more than one. So hopefully this will be time well worth it for you. So just getting started to talk about the different options that individuals and families have for during this pandemic. At the crux of everything, we're really talking about the CARES Act. The CARES Act was a plan that I'm sure you've heard about. It was a $2.2 trillion plan that the Congress has passed. It was passed March 27th. So all of these things that we're going to be talking about today are different parts of the CARES Act. There's lots of layers of the onion of the CARES Act, so to speak. And like Nancy has mentioned, there's many changes, even daily, things that were something yet last night. I wake up in the morning and it's completely different again. So the best way to kind of get the information out to as many of you as possible quickly is basically through something like this. So thank you, Nancy, for putting this together. So starting with individuals and families, I'm sure everyone has heard about the $1,200 stimulus checks. Some of you may have already received it already, which good for you, because not everyone has. There's been quite a bit of hiccups in the delivery of the $1,200 stimulus check. Just for a quick refresher, every individual will get $1,200. Every minor children will get $500 to their parents. And you qualify if you are single and your taxable income is under $75,000 a year. it phases out between 75,000 and 99,000. So what that means is if you are single and you make under 75,000, you're going to get the full 1,200. If you make over 99,000, you're going to get zero. If you made somewhere in between 75 and 99,000, you'll get a prorated amount. And if you're married, all the numbers are doubled. Now, there's quite a bit of confusion on what this money is. Will it be taxed? How it works. So this is technically a 2020 tax credit advance. So we're in the year 2020. It's a 2020 tax credit advance. So they're giving you this tax credit in advance. They're giving it to you before you file your 2020 tax return, which technically you're not filing until April 15th, 2021. The way they base off these numbers that I mentioned, the 75,000, 99,000, they're looking at either your 2018 tax return or 2019. If you have filed 2019, they'll look at 2019. If you have not filed 2019 because they pushed the deadline back to July 15th, then they'll look at 2018. So this is to say that if your income in 2019 puts you above that limit that you no longer qualify, I would probably wait until you get your stimulus check and then file your 2019 tax return. Make sense? So this is a 2020 tax credit advance. So when you follow your 2020 tax return, this money that you received is not going to be taxable. It is not considered income. It's a tax credit that you got in advance. So this money that you get is not taxable. However, they will adjust for it possibly based on your 2020 tax return. So if you're supposed to get more, they will give you more. You're going to get a bigger refund. You're going to get more money back on your 2020 tax return. If you're supposed to have gotten less and you accidentally got more in the event that maybe like you made less money in 2018 or 2019 and then you made a lot in 2020 that precludes you and you don't get the stimulus check, they're not going to take it back. So it's in either case, it's not going to hurt you. This is also to say that while some of us have received this stimulus check, a lot of people have not received it yet. You know, don't worry too much about it. Obviously, it's a cash flow issue. I understand that. But in terms of you not ever getting it, that's not really going to be a concern because if for whatever reason you never received it, when you do your 2020 tax filing, you'll get it on that tax return. Okay.
Oh, do you mind if I ask a quick question?
Yeah, of course.
You know how you were saying that some people haven't gotten it yet? Does it matter, like when you filed your taxes, or it's just the process causing the delays?
It's the process that's causing the delays. Now, if you have filed your 2019 tax return, they're going to use your 2019 numbers. So that's why I was saying, let's say in 2019, let's say we're single, and in 2019, I made 100,000. That means I don't get a stimulus check, right? But in 2018, I was like at 98,000, I'd get something. Right? I would probably hold off on filing my 2019 tax return because I have until July 15th to do so, right? So I can wait till July 15th to file. Probably wait until I get my tax credit and then file my tax return.
Okay.
Okay, and that's actually one of the benefits that they have provided individuals is usually the tax crunch on April 15th has been extended to July 15th. Okay, so and this is only for 2019 tax year. A couple of other, I'm sorry, did I interrupt? No, okay.
Sorry, no, I was just.
Technical difficulties, right? A couple other debt relief options out there, just kind of want to put a huge list together. There are relief options for mortgages. So if you have a mortgage and you have trouble paying it, there are various programs that the banks have at this point. You can skip a month or they will waive penalties and such, for example. Credit cards, same thing applies. You need to talk to your individual credit card provider. A lot of counties actually where property tax have also instituted something where maybe they'll waive penalties or they'll defer payment. As I mentioned before, the tax filing deadline for filing the 1040 individual tax return has been extended to July 15th. This also means that if you were planning on funding any retirement accounts that are typically due April 15th, that has also been extended to July 15th. So that's an extra 3 months for you to come up with money if you wanted to fund for prior years retirement account. A lot of cities have instituted eviction delays where they cannot evict you for non-payment for a certain number of days or months. There's a lot of student loans. They have suspended payments. They will allow you to suspend payments, or some of them automatically just stop it for a couple of months. And then car insurance deductions, and just because we're not driving nearly as much. So a lot of the debt relief programs I just mentioned has to do with, they're mandated by certain city governances or state, even federal. So all the ones that I listed, make sure you call your specific provider to find out the exact details for what you currently have. And some of them are just out of goodwill. We're all kind of in this pandemic together, and at least from a public relations point of view, it just looks better if the businesses are nicer, right? Mm-hmm. Another individual benefit, or I don't know if it's a benefit or not, but an option is if you have an IRA account that you typically need to take a required minimum distribution out. So what that is for certain IRA accounts, typically inherited IRA accounts or traditional IRA accounts in which you are over a certain age, there's a certain amount that the IRS requires you to take out every single year because you have to pay taxes on that amount. Well, they're waiving that for 2020. So this is just a one-time thing, but it's an option. So discuss with your financial advisor or CPA if that's something that would benefit you.
Okay, that's good to know. And another thing I've been hearing about too was, you know, for people who have 401ks, that they can borrow against their 401ks, so without penalty. So how does that work?
So do we want to jump into that? So I know that's part of individuals, but it's more under plan sponsors. I think that would pertain to, it doesn't actually apply to individuals because the individual participant does not have control what options are available in the 401k. So let's jump a little bit. We'll skip small business owners or businesses for now and jump to plan sponsors. So plan sponsors, what that means is basically your employer, the employer that is in charge of setting up the 401k plan. And if you work for Boeing, for example, Boeing is the plan sponsor and you are a participant of the 401k plan that Boeing has. So there are a couple of different changes actually that you're able to add. When I say you, I mean plan sponsor. So there's a couple of different choices now that your employer is able to add to the 401k plan. So note that this is not something that is across the board with all 401k plans. Boeing, in our example, would have to allow for this in their plan documents for you, the participant, to take advantage of these options, okay? So because of the coronavirus pandemic, there's now the birth of something called a qualified individual. And what that means is it's an individual or a spouse or a dependent that has been tested positive for COVID-19. And then you'd have to basically self-certify that you have been financially affected by this coronavirus, whether it's through a furlough, possibly a layoff, reduced business hours, maybe the business closed, or the business is open, but you're just not able to work because you have minor children at home that you have to take care of. So it's a very broad category. So essentially what it's saying is as long as your employer puts these options, which I'll get into in a minute, as long as your employer puts these options into the 401k plan, pretty much a lot of people will easily qualify. Okay, so the two things that they can add into their plan are loans and distributions. So the difference is loans you have to pay back, distributions is essentially a withdrawal. Okay, so plan sponsors, they can amend their current 401k plan. This typically applies to 401k plans, profit sharing plans, and defined benefit plans. If you are a qualified individual, now you're able to take a loan out up to 100,000 or 100%, whichever's less, of the vested balance. So in the past, it was only 50,000 up to 50%, I believe. So they essentially doubled it, which is huge. However, the loan must be taken within 180 days of when the CARES Act was put into place. It was put into place March 27th. 180 days from that would be September 23rd, 2020. So as long as your plan sponsors put these options in your 401k plan and you take a loan out before September 23rd of this year, you qualify to take out this amount of loan. The other option is distributions. So again, it's not up to us as the individual, it's up to the plan sponsors. They can change their plan to include distributions. So this only applies to defined contribution plans, such as 401k plans, 403b plans, 457b plans. It does not apply to defined benefit or cash balance plans, okay, for these distributions. So essentially what you can do here is kind of the same thing. You can withdraw up to $100,000 as long as you qualify as a qualified individual, like I mentioned. You can withdraw up to $100,000 up, and you have up until the end of the year. I think maybe 12/30/2020. And the typical 20% withholding for taxes will be waived, as well as the 10% early penalty will be waived. So that's huge, because usually if you take money out from a 401k prior to being 59.5, there's a 10% penalty. Plus they withhold a certain amount for taxes. Both of these can now be waived. You can withdraw up to $100,000, but clearly that amount will still be taxable. Okay, but here's a caveat. The taxes that's due on that $100,000 that you took out, that tax can be spread out over 3 years. So it's kind of nice. You're not paying tax on 100. If you take 100 grand, you're not paying taxes on 100 grand all in 1 year. You're spreading it out over 3 years. And if you actually, within 3 years, put that money all back into the plan, then you actually don't even have to pay taxes on that. You'd have to amend, you would have to go back and amend your previous tax returns to reclaim that, but you can do that. So it's kind of a nice option. And then just to note that this is not the same thing as a hardship distribution. Okay, so again, these two provisions, loans and distributions, these are options that your employer can choose to add to the 401k plan. Whether they do it or not, it's up to them. But if they do, then those are the options that you have available to you. And then for all 401k plans, whether your plan sponsor allows for them or not, same thing with the required minimum distributions that I mentioned earlier that can be waived for 2020, same thing in 401ks. So if you have a 401k, same thing. If you have to normally take a required minimum distribution, you don't have to do it for 2020. If you already did it, because we're already in April, let's say you did it in January and February before all this pandemic craziness has happened, you actually have 60 days to undo it. 60 days very likely will get stretched out to 90 days, or just you can undo it at any time within the calendar year. It's possibly, I mean, that's how the trend is looking right now, but currently it's still a 60-day window. So you did it within 60 days, you can undo it.
Okay.
Oh, I'll note that does not apply to defined benefit plans or cash balance plans.
Okay. And sorry, one thing I forgot to mention to everyone that's on the call today, the chat box is open in case, like, while we're talking, you guys have specific questions. Please feel free to just pop it into the chat box, and then if it isn't already addressed in the conversation or during this interview, we'll make sure that it gets answered and we'll email you your answer. But now, since we're already talking about businesses, what other programs, because I know that there's like the economic injury disaster loan, the PPP, like what are the differences between those, and especially with the news last week saying that funding is already gone, so should businesses even think about applying for that, or is it a lost cause?
I would. I'll talk a little bit about it, but since you've mentioned the economic injury disaster loan, that's a mouthful. I'm going to call it EIDL. Okay, so this is an existing program through the SBA, so it's been around. It's not new because of the pandemic. It's through the SBA, so when you apply directly with the SBA. But make note, you must live in an area where it has been actually declared a disaster by the governor. So if it has not been declared a disaster, you cannot apply for this loan at all, okay? This is a loan, so therefore it does require repayment. There is also a fairly extensive underwriting process that you must prove that you have been harmed by this disaster. So a slight decrease in income is not going to be enough to qualify, okay? It can be a max of up to $2 million, so it's a fairly large loan. It can be used for any business expense, so it's kind of nice to have that flexibility. The rate, they fixed it at 3.75% over 30 years, so it's very much in line with a home mortgage loan. So that's basically the EIDL loan. Another one that you had mentioned was the Paycheck Protection Program, so I'm going to call that PPP. You can apply for the EIDL and the PPP concurrently. However, the money that you receive has to be allocated towards different expenses. So for the PPP, this is the one I think has the most attention that most people are talking about, and it's probably the one that I think most people would actually apply for. So when they passed the CARES Act, there was $359 billion allocated towards this. And how you can apply for this is, or how you can make sure you are able to apply for this, is you have to have under 500 employees. It's designed for small businesses. In my opinion, it seems pretty high to have 499 employees. But if you're under 500 employees, you count and you can apply for this. And this even includes sole proprietorships. So those that are just getting 1099 income as well. Okay. Now, this is technically a loan. However, it can be forgiven if certain qualifications are met. And that's why there's so much publicity and popularity with this plan. So there's no underwriting requirements for this, since the only requirement is to have been affected by COVID, which everyone has. The loan amount will basically be 2.5 times your average payroll expense. So however much your monthly average payroll is, times 2.5 is what you're going to get on your loan. And just to make sure we're all understanding this, payroll expense means W-2 salary. So if you're a business owner and you have K-1 income, that does not count. Okay. And I mentioned earlier that as long as you meet certain requirements, you can have all of that waived, and you basically, it would have been free money. So the requirement is that you have 8 weeks, you have 60 days to spend at least 75% of the loan on payroll. So it has to be on payroll, because this is trying to stimulate the economy and keeping everybody hired. And you have to keep your employee headcount the same. So let's say you started off and you had 5 employees and one of them you had to let go for whatever reason. That's fine, but you need to hire someone else to replace that headcount. Okay. So you have to do that for 8 weeks, right? At least 8 weeks. You have 8 weeks time to spend 75% of that towards payroll. If you don't, then the amount that you didn't spend or so basically will be considered a loan, and you will have to pay that back. The loan is over 24 months from when you first received that money, and there is a 6-month deferral period. So essentially you have to pay it all back within month 6 and month 24 of the loan. I believe in the actual official documents, it says the interest that they're looking at is 4%, but I believe SBA says it'll be 1%. So anyway, it's going to be somewhere in that range, and it'll probably be low. But for the most part, people who are applying for this loan, their intention is that it will all get spent, so they won't have to pay it back. This loan does not impact. Go ahead.
Oh, sorry. We do have a question that came in, and it says, it's asking, does the Schedule C for the owners count with the payroll expense?
I believe you can use that, because when you are a sole prop, you don't have 941s and 940s. You're going to have to go with your 1099. So I do believe that's the case. Now, something that's interesting about sole props is because the deadline when they opened this, April 3rd was the deadline for businesses to apply. April 10th was the deadline for sole props to apply. Realistically, by the time the sole props applied, the money already ran out in terms of being allocated. So there's still a little bit of uncertainty there in exactly what documents that they're really looking for. We'll know in the second wave when it comes. I'll quickly mention that applying for this loan or accepting this loan does not impact your credit score. There is no credit pull for this process, and you have to apply through any 7A approved SBA lender. So it's not directly with the SBA. Now, what you had mentioned earlier, the money essentially evaporated so quickly when it first came out. So in the law, there's I think I read there was like 700,000 applications in queue that are just hanging and not sure what's going on with this money. So so obviously there's going to be a second wave of injection of cash soon. There's at least the Democrats and the Republicans both agree on that. They seem to be getting close. As of, I just checked as of like an hour ago, they're really close. I think they have a meeting at 4 o'clock Eastern time, so that would put it around 1 o'clock California time. And it's likely it'll get approved today for another 300 billion. I don't know if it'll happen, but that's what it seems like it'll be. I think it's going to be a $400 billion package. 100 billion of it is going to go for hospitals and testing. 300 billion or 310, I think, will go towards the PPP program. So, you know, cross your fingers. I hope that goes through. I mean, it seems like everybody's on the same boat that they want to push it through, which is, you know, definitely a positive thing. It's just a matter of when that's going to happen. So if you are in queue, just hang on and wait. I'm sure the banks will get to you at some point. There's also been some talks about banks favoring larger corporate accounts than smaller ones, and there's some lawsuits going on there. But if you're already in queue, then just sit and wait at this point, and hopefully that the funding will come. If you haven't applied yet, I would say there's no harm in applying. You'll just sit in queue, and when the funds come, you know, they'll come. The good thing is everybody agrees that the small businesses need money. So that's definitely a positive.
Sorry to interrupt. We have two more questions. One is, has the SBA opened the applications because they were closed last week? So I don't
You mean, so the SBA applications must be referring to the EIDL then, right? Because the PPP is directly through the bank. So that I'm not sure, you may have to check back. I have heard that they closed it when the funds ran out. So if that's the case, they're probably waiting for their second injection before opening it again. That's my guess on the SBA side.
And then the second question is, for PPP, do lenders or the banks give priority to their bigger clients first? They know it's first come, first serve, but it seems like they're giving priority to the bigger clients.
Yeah, I would agree. It's unfortunate, and I don't think that's what the intention was, but I guess if you think of it from the bank point of view, they're going to do the same amount of work. They might as well give it to their better clients than just first come, first serve, right? So, and I know there's some lawsuits right now pending for that. I think Wells Fargo is the one that's currently in the name right now. And so I think maybe with the second wave, things might change, and it might just be first come, first serve. But I would agree. I think they probably did prioritize the larger ones because I only know one business, one of my clients received PPP, and they have a fairly sizable business with a pretty high payroll in the millions. So, and they're the only ones I know that got it.
So I know for our business, we applied for the PPP, and we only got a response saying that they received our application and they needed supporting documents, but nothing about the loan has been approved. So I'm assuming that a lot of people are probably in that same boat. I'm just happy I got a response.
It's a very slow pipeline. So the funds, I believe, ran out the evening of April 15th. It just means when they say the funds ran out, it doesn't mean everything has been dispersed. It means every dollar has been allocated. So this business will get this much, this business will get that much, but it hasn't actually been dispersed. So if you have been accepted, you could be getting disbursements now, even before the second wave comes out.
Okay.
One more.
Sorry,
one more program I will highlight, just because this is a fairly new program, and it literally, I think, just came out yesterday. But it is specific to California, so it does not apply to other states. But there is a pandemic unemployment assistance that California is providing out, PUA. So it's essentially assistance for unemployed or partially unemployed individuals. So business owners, self-employed, anybody who has exhausted their current unemployment benefits. There's a certain amount that California is going to pay out. I think it's a minimum amount of $167 a week. Could be higher based off of your current payroll and such. It's going to be retroactive starting February 2nd, and it would last for 39 weeks. So this is in addition to the $600 a week that came out through the CARES Act. But the applications for this California one is going to be open through It's going to be open on April 28th directly on the EDD website.
Okay. And then just because I noticed that we're running a little bit overboard, but I was just curious, how has the stock market fared, and what are ways to capitalize on the market, in your opinion?
Yeah, there's definitely some things there. Can I just talk really quickly about a couple of different plan sponsor options as well that we didn't talk about? So for businesses that have 401k plans or group retirement plans, funding has been extended due to this pandemic. So this applies to defined benefit plans, cash balance plans, and money purchase plans. The deadline to contribute for 2019 has been extended to January 1st, 2021. So typically, your 2019 contributions must be made by March 15th, your tax filing deadline, plus any extensions, so up to, say, September 15th. However, they basically added an extra 2.5 months on there. However, note that any contributions made after September 16th through December 31st, 2020, you will have to add a little bit of interest into the contribution, so it'll be a little bit higher than normal. Make sure you talk to your TPA immediately if that's what you're planning on doing, or if you're even considering freezing your defined benefit plan for 2020. The other one, real quickly, safe harbor plans. A lot of employers have safe harbor plans because they don't have to, they can avoid testing on the 401k plans. You do have to still make the safe harbor contributions up through whenever you, as long as you have a safe harbor plan in place, you have to make the contributions still. You can elect out of the safe harbor option mid-year. So let's say you decide April 21st today, you're going to opt out. That's fine. But between January 1st and April 21st, those contributions for safe harbor are still due. And then the other thing to note is if you're going to opt out of the plan, make sure you do a calculation, talk to your CPA or your TPA first, because once you opt out of the safe harbor plans, ADP testing, top heavy testing are going to apply for the full plan year. And that's probably what you were trying to avoid in the first place by going with the safe harbor option. Just wanted to put that out there. So, I'm sorry, yeah, what was your question?
Yeah, and I guess another thing that we've been seeing a lot of movement in is the stock market. So being a financial advisor, you know, what is your opinion about what's going on in the stock market, and then maybe ways to capitalize on it if there's that opportunity, or yeah, what do you see on the horizon?
Yeah, the stock market has been as volatile as how we feel emotionally, hasn't it? The broad market index in the last few weeks has definitely been up and down quite a bit. From peak to trough in a 5-week span, the market dropped 32 to 35%, depending on the broad market index. So there's going to be some scary first quarter statements coming out, I'll be honest with you. So if you're probably receiving your first quarter statements in the mail soon, if you haven't received it already, just know that it's not going to look pretty. However, since then, the market has recovered about 50% already. And so when you look at your statements, don't feel so bad. It's a little bit higher than what you actually see. And then I will mention that I think that there are many money managers actually that think that we will still retest the lows in the second quarter. So just be prepared for that. And this is just what I think. Take it with a grain of salt. It's probably going to be about 12, 18 months for full market recovery from all of this. So different ways to capitalize on the market. It really depends on your individual situation and circumstances. Make sure, I'm just going to list a couple of different choices, but please make sure you talk to your CPA or your financial advisor before implementing anything, because this may or may not even apply to you, okay? So the first thing I would say is don't act irrational and move everything to cash. It's so tempting when things are going crazy. Even today, when I last checked, the markets were not behaving well today, is to move everything to cash and just play it safe. But remember, why did you open these accounts in the first place? Why did you even invest in the first place? What is the reason why you have this account? And when do you actually need the funds in the account? If it's, for example, for retirement, are you planning on retiring, still? Are you still planning on retiring? So just think and focus on the big picture, on why you have these accounts in the first place, and don't be so irrational and move everything to cash. Because in general, when you move things to cash, you're essentially locking in and realizing those losses, and it may not necessarily be what would be best for you in the long run. Okay. But I understand that fear is out there. So what I would recommend, if you're still fearful, is to maybe consider where you are investing your future contributions. So many of us still have 401k plans. You're still getting paid, so the contributions are going into your 401k every 2 weeks. Well, maybe take a look and see where are those being invested. Maybe you can be more conservative with that, or maybe leave those in cash, for example, if you're still scared. But I wouldn't move anything that's already invested into cash. On the other end, there are people that are very opportunistic. This is a great opportunity to potentially make money in the long run. Essentially, you're buying shares at a discount. So things are on sale now, is one way to look at it, okay? If you have large positions with large unrealized gains, this is a great time to reposition them into more diversified managed portfolios. So if you were a corporate executive at Yahoo, for example, maybe not Yahoo anymore, let's say Google. Let's say you're a corporate executive at Google and you have a lot of Google stock from RSUs, restricted stock options, from matchings, however, you have a lot of that. And now, let's say Google has fallen quite a bit, it might be a good opportunity to divest that so you're not having all your eggs in one basket. Refinancing is a great option to look into. If you have a home and you have a loan and you haven't thought about refinancing in the last year or even few months, this is a great time to look now. Take a look at your current lender as well as other banks. They have cut interest rates twice now, so chances are it's a great time to refinance. One caveat I will say about refinancing is since 2018, loans, only the first $750,000 on a loan is deductible. This is for a primary resident. If your loan is over $750,000, say you have an $800,000 loan, $900,000 loan, that extra amount, the interest attributed to that extra amount is not tax deductible. So do the math, see if it makes sense for you to refinance now. And the last thing I will say is IRA conversions. If you are considering converting from your IRA to your Roth IRA, and that was something you were planning on doing this year, this might be a good time to do it now. The amount that you convert, you will have to pay taxes on in that tax year. But when the market is lower and you're converting that amount, you're essentially moving more shares over for the same amount of tax that you have to pay. So again, all of these are just options and suggestions. Don't implement anything until you talk to your advisor, because every situation is different.
Thank you so much. That was, I feel like, so much helpful information in the quick 30 minutes that we have. And I just want to let everyone know that the information that we have here, we'll share it with everybody, this recording as well as the transcript, and additional resources like SBA links and just additional information that might be helpful to you. So I want to thank you so much for your time, Donna. I appreciate it, and we look forward to, you know, having more of these kind of chats in the future. So thank you, everybody, for joining us, and have a great day.
Thank you for your time.
Thank you.